Hey, Algebra 1. Today we are talking about the federal income tax. Your parents know what it's like, and it's quite confusing, and maybe after this lesson you'll get sort of a glimpse into how the government taxes us adults. We're going to start out with this information that is in your classwork. We're going to use these two charts throughout our classwork and our problem set. Okay, I'm not going to come back and copy and paste this chart into all the pieces and parts of this lesson. So just know I'm going back and referring to it, and keep a tab on it yourself so that you can go back and refer to it too. This one too. So 3 charts, very important. We're using them all. First of all, what is taxable income? The U.S. government considers the income of a family or individual to include the sum of any money earned from a husband or wife's jobs and money made from their personal businesses or investments. The taxes for a household, for an individual or a family, are not computed from the income, rather they are computed from the house's taxable income. So taxable income and income are not the same. Income should be much higher than what we actually get taxed on. For many families, the household's taxable income is simply the household's income minus exemption deductions. Okay, they take our income and they subtract things from it to make our taxable income less. So taxable incomes, minus exemption deductions and standard deductions. So here you have taxable income is your actual income minus the exemptions minus the standard deduction. All of the problems we will model in this lesson will use this equation to find a family's taxable income. The only exception is if the family's taxable income is less than 0, in which case we will say the family's taxable income is just plain old 0. Use this formula in the tables above to answer the following questions about taxable income. So exercise 1. Find the taxable income of a single person with no kids who has an income of $55,000. So you're looking for single, no kids, income of $55,000. So our taxable income is our income minus our deductions. And if you look at the first chart, I'm looking at single, no kids, and my exemption deduction is $3,900. Exemption deduction, it's on the chart. And then my other deduction is a single standard deduction of $6,100. This would be the standard deduction. So we're taking those two values, doing a little subtraction. So the taxable income is going to be $45,000. So that's what you're going to get taxed on. Not the $55,000, but the $45,000. Exercise 2, find the taxable income of a married couple with 2 children, combined income of $55,000. So same income. We're going to take away let me get back to the chart. Married, 2 children, the exemption deduction, and then 2 married filing jointly, combined income. That means both of them together have a combined income of $5,500. So they're filing jointly. They're filing their income tax together as a married couple, because you can file it separately. They're choosing to file it together. Let me do some subtraction. 15 to. So their taxable income is $27,200. They are getting taxed, their taxable income is much less than the previous slide, because the previous slide, if you remember, that was a single person with no kids making $55,000. That's pretty good money, but when you have a married couple, 2 kids making the same amount, they have a lot more expenses, so the government doesn't tax them as much. Exercise 3, find the taxable income of a married couple with 1 child, combined income of $23,000. So go to the chart. find out what the exemption deduction is for married with one child. Oops, sorry about that. 11,700 is the exemption deduction, and married filing jointly is 12,200. 23,000 minus 11,700 minus 12,200. Ooh, negative $900. So their taxable income is 0. This right here is the standard deduction. So they are not getting taxed. They don't make enough money to pay taxes. Federal income tax and the marginal tax rate. Below is an example of how to compute the federal income tax of a household using the federal income tax table above. Hold on. So above, on one of the first slides, there was a table that was labeled the federal income tax for married filing jointly. So we just spent how many exercises calculating taxable income. So once we know what the taxable income is, we can go to this chart and compute the actual amount of taxes that we pay off of the taxable income. Okay, so that's what we're going to do now. So for our first example, it says to compute the federal income tax for the situations described in exercise 1, a single person with no kids making $5,500. From the answer in exercise 1, the taxable income we calculated was $45,000. Let's look up $45,000 in the tax table from that first slide that's in your classwork, and we see that $45,000 corresponds to the second row because it falls in between $17,850 and $72,500. It's in between those things. So to calculate the tax, we take 45, I'm going to write down, the first thing we have, the tax is $1,785, and then we need to take 15% of the amount of income that's over $17,850. So I need to figure out how much tax that we're going to pay. And you're going to have to do this in your homework assignment, so please follow along and ask questions if you have them. Right now I'm subtracting 45,000 minus 17,850, and I get 27,150. This is taxable income. Then I multiply that by 0.15, which is 15%. And I get 4,072.50. So to find out how much tax this family owes, I add these together, and I get $1,785, $5,857.50. This is how much this family pays in taxes this year. Cool? Cool. Let's try one. Compute the federal income tax for a married couple with 2 children making $127,800. First, we need to figure out what the taxable income is. So we're going to take away the deductions. Married with 2 children, look it up on the chart. I need to subtract 15,600. That's our exemption deduction. And then the standard deduction, so 127,800 minus 15,600 minus 12,200. $100,000 is their taxable income. I'm going to go to the chart now, and if I look at the first, second, third row, $1,000 is in between $72,500 and $146,400. So that means that the tax is $9,982.50 plus 25% of the amount over $72,500. $27,500 times 25% times 0.25, 6,875. That should go right here, actually. I should have not written it down there. So I add those two together, 9982. The amount of tax that this family is going to pay to the government is $16,857.50. That is their federal income tax for making that much money with the deductions. Now, another thing that we can calculate with tax is the tax percentage. Sorry, lost some words. Taxpayers sometimes misunderstand marginal tax to mean if my taxable income is $100,000 and my marginal tax rate is 25%, my federal income taxes are $25,000 because 0.25 times 100,000 is 25,000. The statement's not true. They would not owe $25,000 to the federal government. Instead, a marginal income tax charges a progressively higher tax rate for successively greater levels of income. Therefore, they would really owe 10% on the first $17,850 in taxes for the interval here, 15% on the next interval, 25% on the last interval, for a total of $16,857 of the taxable income. So their effective federal income tax rate is 16.8575%, not 25% as they claimed. Note that the tax table above incorporates the different intervals so that only one calculation needs to be made. The answer to this problem is the same as in exercise 5. It's what we calculated right there. Okay, we're going to do an example of this though. Okay, instead of what you see in your classwork, we're going to do this problem as our last example. This is the last slide we're going to use, but there's an example here that I need you to go over because you have a few homework problems on it, and it's this part right here. Okay, we have not calculated the effective federal income tax rate. So first of all, let's look at this. A famous movie actress made $10 million last year. She is married, has no children, and her husband does not earn any income. Wow. Assume that she computes her taxable income using the following formula. Okay, same formula we've been using. Find her taxable income. So I have $10 million minus the deductions. Okay, look it up. Married, no children, and the standard deduction. So I've got my exemption deductions, my standard deductions. I get $9,980,000. If I check out the chart, the last row is for income over $450,000. The tax is $125,846, yeesh, plus the marginal rate of the amount over $450. So I need to figure out how much over we are and multiply it by the marginal rate of, if you look at the chart, 39.6%. It's expensive to be rich. Gives me taxable income, or sorry, what I calculate my taxes off of, times 39.6% times 0.396 gives me 3773880. Okay. So this person pays a lot of taxes. This is how much they're paying. So I'm going to add that to 125,846. Total amount of taxes this woman is paying is $3,899,726. That's how much tax she pays each year. Now, to find the effective federal income tax rate, we actually take the amount of taxes that she actually pays and divide by how much she actually makes. So $10 million. So how much did she pay? Divide by how much did she make? That equals 0.38997. I haven't rounded it yet. If I multiply that by 100, it's actually 39% in taxes. Okay, that is her effective federal income tax rate. Cool? That's it. See you in class. Good work today.